Well, hello guys, welcome to my YouTube channel, and this is Macro Market FX, where I'll be covering from the forex market, futures market, and the stock market. So today let's cover the stock market, where we'll be looking at a company called Yiren Digital Limited. Well, this company is a company based in China, so we're going to look at its potential growth over the long term. Well, this is a good company for those who are looking for investment hold in the long run. For those who are looking for option trade, well, this company will be a good fit for you. As I said, the company is called Yiren Digital Limited. Well, in this company, we're going to cover the following segment. We're going to look at the P ratios. We're going to look at the dividends. We're going to look at the at the balance sheet, the financial health of the company to show how this company has a room of growth over the long run. So let's take a dive in at the company. Well, Digital Yiren Digital Limited engaged in the online consumer finance marketplace. It operates through the following segment: financial service business, which includes the insurance brokerage business, and consumption, lifestyle business, and others. Well, the financial business segment focus on the loan facilitation. As you see, this company provide loans. As I said, this is an online finance marketplace where to provide finance, facilitate loans, self-backed, self-funded financial services, the consumption, the lifestyle business, and others segment includes of non-financial products and service offering. The company was founded by Ning Tang in March 2012 and is headquartered in Beijing, China. As you can see, this company is a based Chinese company, where is a financial and online company. So is deals with the technology and also deals with the finance company. So it provides services, financial services company. So this is a good company which today we're going to look at its financial balance sheet to see how this company has a great potential upside in the long run. For those investors looking for investments for companies to hold, this is a good company, and this is one of the ways of diversifying your portfolio, where you invest in companies in the US, you invest in the companies in China, as you also know the Chinese economy. Over 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 the 10 years span, the Chinese economy will grow. So you have to benefit from companies like this. So let's look at the market overview of the company. Well, this company has a market cap of over 557 million, 57 million, and is currently price is trading at 6.20 a share. Let's take a look at this P ratio, guys. P ratio is 2.5. So this shows that the company has a very great room of growth over the long run. As you can see, this company is based on China. You also know what the Chinese economy has to the world. It's the second largest economy in the world. So, and according to analysts, over the 10 to 15 years, China is projected to be one of the strong economies in the world. So you have to benefit from this. You benefit by investing in companies that are in China. And you see this company is directly invested in China. It has no overseas operation. Okay, let's take a look at its earnings per share, $2.51. So over every share the company in $2.51. Why this company is a good company? As I say, it provides dividends. So you hold the company over the long run, you also get dividends of 0.22 cents a dollar. So it's a good company. Its P ratio is very good. You see, this that shows potential upgrowth this company. So this company is directly buy companies, a buy opportunity, not only for those who are looking for long-term traders, for also option traders. Okay, let's take a look at the financial statement of this guy, the financials of this company. This the financials of this company to see how this company operate, to see how this company engage itself in its company health. As I said, this is a long-term company. So how can we portray that this company is a long-term company? So you are going to look at the financial company. You are going to look at the financial health of the company over the 5 years. You have to look at the company over the long run. Over the 5 years, what was the company doing? So you can look at the company 5 years ago. So this 5 years ago show you directly what is going to happen on the 5 years ahead. That is what I'm doing. So let's take a look at the financial balance sheet. Okay, let's take a look at the balance sheet. This assets, total assets. So you're going to look at from 2019 to 2023. Let's start here. This report of the financial 5 years back, as I say. The 5 years back help you to project what are the 5 years forward going to be. And I said this is a Chinese company with a Chinese room of growth. Economical, this company will have a huge potential profitability, huge potential growth over the long run. Okay, its total asset was $1.3 billion. It went to 1.202. Then you see assets start growing to 1.21 B, 21.23 B billion dollars, 21.45 billion dollars. This was in 2023, and you can see on his asset growth keep on increasing. So this shows that the company has, has growth. You see his total asset growth. You see his asset growth. So this company shows that has a room of growth. So let's take a look at his total liabilities. Well, his total liabilities in 2019 was $739 million. The liability reduced to $400 million. You can see it went to $457. It went to $360 million. It went to $300.08 million. You can see while his total assets are increasing, his total liabilities are decreasing. So this shows that there's an equity rate for the company to do investment. There's an equity rate for company to continue doing financial investment, doing AI technology innovation. As you can see, AI is the future. So you see his total assets are decreasing, his total liabilities are increasing. So this is one of the main things shows the company grows over the long run. While looking at companies, I would like to advise you must look at companies past financial movement so as to portray the future financial movement. And his P ratio doesn't lie. You saw his P ratio is 2.5. So this shows that this company, you are buying a company at a fair value price. This company is at $6 a share right now. So just take a look at the next 20 years, 15 years, 10 years, 5 years. Where will this company be? Okay, let's take a look at his 2024 total asset. You see, 2023 it was 1.4 billion. It went to 1.7. You see the 2024, $1.7 billion. See growth. That's what I told you. Assets are continue increasing. Let's look at this liability. This liabilities from $308 million. Now it has increased to $471 million. So his assets has increased, but also his liability has increased, but also his assets has increased. You see, so you can take a look at his equity. So the company has a large financial growth ahead. You can look at also at his equity. See equity growth. You see equity growth. You see equity growth from 800 million to $1.1 billion to $1.3 billion. See is equity continue increasing. This means that the company has enough money to invest, to pay dividends, to cope with the competition. That's why I said this company has a great room for potential growth. And while we were reading about the company here, the company said it operates within China. So currently there are ongoing things about the tariff, the US tariff to the Chinese tariff. Yeah, I know this is something which won't last forever, will be resettled. But this company operates within the China's border. So all the tariffs which were implemented by the US didn't affect this company directly because this company doesn't have goes overseas, doesn't trade overseas. It trades within the Chinese boundary. So they are the 145 tariff on goods on different business segment didn't affect these companies. But overall the Chinese economy will be affected by the tariff. So this will have a little effect of the company. But this doesn't change the outlook of the company over the long run. As I said, you look at the previous 5 years, you saw assets were increasing while liabilities were decreasing. Asset had a large room of increasing more than the liabilities. So this shows the company has great potential value of growth over the long run. So those who are looking for income investors, those who are looking for companies to invest, this is a good company. And this company is based in China, guys. So it's a good way to do portfolio risk management. You do diversification, so you invest in goods. You don't have to buy all the companies in the US. You must diversify. You buy companies in Asia, you buy companies in the Europe, you buy companies in the South America. So as when economic turmoil come, there are certain points where your portfolio will keep on being strong. Your portfolio balance sheet will keep on being strong. So things like this. So you see, this is a good company. And option traders, this is also a good company. You should invest into it. So let's dive in to look at this technical technical price for those who are looking for investments, for those option traders who are looking for trades to over the short run. But those who investors who are looking for long time trades, those holding trades like Warren Buffett, you hold interest 10 years, 20 years, this is the right plan. Just imagine this is 2025. What will be in 2035 the Chinese economy? You know the Chinese is the threat in economy to the United States, the second largest economy. Well, 2035, Chinese will have a massive economic development. Will have a massive technology development. Will have a massive financial development. As you can see, last year the Chinese company implemented stimulus in the economy in order to 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 provide growth in the economy. So what does it mean? People will there will be room for loans, there will be rooms for business growth. As you see, this company provide financial business services such as loans. So what do you expect? People will take loans, and currently there's a room for decreasing interest rates. So this means that the company will grow due to its supported government policy, interest rate policy. When the Chinese economy reduces its interest rate policy means there will be a room for growth, room for business. There will be more business consumption, more business loans, and there will be this will make the company grow. So let's take a look at his technical analysis, show technical analysis. So as I said, that this is a great buy opportunity over the long run. For those option traders, you can have trades, you can take trades. As you can see, the company has been ranging from a 4%. It goes up to come back to a ranging of 4%, 4%, 4%, 4%. As you see, likely on March 7%, and this was caused by the quarter four reports of the 2023, which shows a light decrease in the data. So it's fine, but this doesn't change everything. You see, it's total overall 2024 balance sheet so growth. So the quarter four doesn't change the company overview over the long years. It doesn't change everything. So that's why we went to look directly at the balance sheet. You see, the 2024 balance sheet shows growth in the assets. You see, so the company right now is trading at a $6 a share, and for those who are looking for option trade, you can take this, you can hold this, you can find the option trades up to $9 a share. You can take your profit from there. Those who are looking for short of the trade contracts, but those who are looking for long profitability, income investors, value investors, this company has a very good advantage. First of all, its P/E ratio. Its P/E ratio is on 2.5. This shows that this company over the long run has a room for growth. Look at his balance sheet. Balance sheet has a strong balance sheet. That's why I took you back to from 2019, just to look from the 2019 how his asset were growing, how is the liability, the difference between asset and liability. This shows that this company will grow. Okay, look where this company stated in China. Yeah, I know China right now they're facing an economic trade war with the US, but this doesn't change the the overview of China 10 years policy economic growth. You know, China is the second largest economic and is a threat to the US. So, what will happen in 2035? There will be a great room for growth within the Chinese economy. Great room for growth within the Chinese economy. Great room for growth within the Chinese economy. So, you not only benefit from holding the 10 over the long run, but you also have dividends there. You also have dividends, meaning that you'll be paid for holding. The current line now is 0.22 a share. But what 0.22 a share? But what do you expect over the long run? The dividends will grow. So mean that you not only earn profit, you earn dividends, and its financial growth. You have to see the balance sheet is strong, and you see Chinese is a very strong economic country where it support business growth. You see, its interest rates currently is at 3.5, 3.6. And right now, there's a discussion that the bank might reduce its interest rates in order to cope with the economic. So what do you expect? So these company guys, I want you to look at it and invest. Invest. Those who are looking for option trades, as I say, you can take an option trade from $6 a share up to $9 a share. Why do I say? Let's look at the weekly time frame. This weekly time frame helps you to know the great overview of the company. As you see the the blue moving average still continue shows growth, continue shows strongness in this line. So the price has been bouncing around. So also looking for option trade. This is an opportunity. You can look for call options up to the $9. Those are the option traders, but those in income investment, those who are looking for investment over the long run, you can just hold it over the long run. The financial balance sheet shows everything. So this is the company, guys. I'll advise you to look up to it. I'll advise you to invest, but you invest wisely. And guys, there is more to learn about the stock market. So I'll keep my link on my section of my Upwork link. Just click the link, send me a message, let's connect. I'll teach you more how to look, how to invest. I'll teach you more about portfolio diversification. I'll teach you more about implied volatility. For option traders, you must know implied volatility. Implied volatility helps you to in risk management, help you to look at the price projection aligned with the volatility. All those you get while working with me, looking at the macroeconomic data from a large perspective view. That's why I say that you see the Chinese economy has a room of growth over the 10 years. So if Chinese has a room of growth over the 10 years, largely increased growth, so what will happen to this company? This company is, guys, it's not also a financial company providing financial growth. It's also an online financial growth company, meaning that is an internet company and an AI company. You know AI. AI is the changing world order right now in technology. So this is the company that have personal benefit from. So please subscribe to my channel for more videos coming. Please like my videos. If you want me to talk about other companies, please share in your comment section. Other forex pairs, please share in your comment section. Futures contract pairs, seasonality pairs, commodities, please share in the comment section and I'll reply and let's get in touch. Please don't forget to subscribe and like this video, and I've placed my Upwork link on my comment section and it's also in my bio. Please follow the link, message me so as we can connect. Thank you everybody for your time. Have a great week. There are more videos coming, so thank you.